Well, here we go, DraftKings Q4, what a company, what a stock. This was unbelievable. Now, even me as a DraftKings bull, and I had big expectations for this quarter, DraftKings came in and they smashed them out of the water. This quarter is the best quarter I've seen them deliver since I've been investing in the company. I cannot believe how good this quarter was from DraftKings. And obviously at the moment, it's been a fantastic day. The share price has done absolutely amazing. And I could argue that today, that share price should have been up even more. So I just want to say, first of all, well done for anyone that was a DraftKings bull and was buying this stock when it was $11, $10. I think it even went into the $9 range. It might have gone lower. Well done to anyone that stuck through this and bought the shares in them sort of prices, because right now, you are looking a genius. You're getting the reward, so well done. Because it was a bloody tough time. You know, 2022 was a bloody tough year, and if you stuck it through, and now you're sitting on today watching that DraftKings share price, you deserve to give yourself a pat on back, and you know what, you deserve to go get yourself a nice drink after watching this video, because it's been a tough year, and today was one of those days where you sit back and you went, you know, obviously, not to get too carried away, because we still want to see it do absolutely amazing in 2024, 2025, 2026, 2027. But Jason Parks, Jason Robbins, well done, because you smashed it out of the park, and well done for you shareholders that stuck it through this really tough time. My next point I want to make is it was really funny to see all the DraftKings shorts, all the people that bear us on DraftKings, from the videos that I posted on DraftKings, suddenly started deleting their comments, and there was a lot of comments that suddenly disappeared. They were a bit worried they might have got screenshotted and be put onto the video, and there's a few people going in and going, I'm just going to go edit that comment I put saying that DraftKings is going to drop 20% on Friday. They suddenly disappeared, so you know who you are, but hey, let's get stuck onto these positives, because this was a fantastic quarter from DraftKings, and I'm running out of room here, so I'll try and go through all these points here. I've listened to the conference call a couple of times, that's why I'm a little bit late doing this video. I wanted to make sure I got everything on here, and even though I've nearly got everything on here, there's a few I've just knocked my pen off, there's a few good points that I missed. So now I've got my pen back, let's go through this DraftKings Q4. So first of all, let's just go through some of the numbers here. EBITDA, negative 47 million compared to negative 117 million. Fantastic beat. This number alone here was unbelievable. Now, I was hoping DraftKings went in through point of view. You've seen what you report later into earnings season. You've seen what the market is really focused on. It's focused on profitability. It's the key thing. You know, I think DraftKings can come in with poor revenue numbers. I think I said on Monday when we talked about the preview into earnings, I said DraftKings can come out with okay revenue numbers. It's the losses that they need to work on, and that path to profitability. And talk about the path to profitability, that's the key thing. And credit to Jason Robbins, credit to Jason Parks, that's what they delivered on. The EBITDA, really, really fantastic beat. You know, this isn't a beat of just like 10%, 20%. You know, this is nearly 50% reduction in the EBITDA losses. Absolutely fantastic. Revenue, 81% versus 69%. And the thing is, they even continued. They didn't just go, oh, you know what, forget revenue or come in line with revenue. We're going to improve the profitability, and we're also going to focus on revenue growth. And look at that. That was just an absolutely insane beat. And I was a bit worried about this. I saw the hold rate and I was a little bit like, you know, that hold rate made me a little bit nervous. But honestly, it did really amazing. They actually said a few parts in the conference call, like they've really improved the hold rate as well, which is fantastic. Now, revenue forecast for 2023 was hiked up as well. Not a massive hike up, but still a hike up, which was really good. The EBITDA, big hike up. So they said that they were going to have EBITDA come in at negative 400 million compared to 525 million. So this was a reduction of 125 million. This is absolutely amazing. You know, this is what a few shorts last time in Q3 tried to say was the cause of the stock, which dropped like 20% on last Q3 earnings, was because of this. And then they come out and then they go back to what was expected, or even above what was expected, and it was absolutely fantastic. That's such a major improvement. Revenue was probably one of the weaker points in the earnings call. Not that it was terrible, I don't think it was terrible, but it was probably a little bit lower than what people were expecting. They gave a range of 33% to 37%, which was the expected 36%, so it was a bit in the range really. You know what DraftKings is like, they do sandbag numbers, and I think that they have sandbagged this a little bit. I would expect it more to be probably towards a 40% plus revenue growth range. So I think there will be around about there. Monthly active users, they got a little bit of criticisms on this previously, but bang, back at 31% growth, which is really good. Ad revenue per user up 42%. So the big thing is that people are coming to the platform, and then when they're spending more money, they are spending money on the platform, they're increasing the money they're spending on the DraftKings platform. Obviously, that helps because of the different things that they're offering, but also the introduction now of GNOG, where there's probably a lot more cross-selling going on, where they're using the DraftKings platform, but then potentially using some iGaming platforms or the GNOG platform. So that was absolutely fantastic. And at the moment, there's 42% of the US covered, 42% of the US population covered. Now that is obviously showing that there's potentially so much growth still to go, but they are getting to a bit of where they're getting to the majority now, where so they've really benefited from using more national adverts rather than state adverts. National adverts are cheaper, and as well as that, they also can get coverage into states that they're not currently in, so that when they do go launch in them states, they'll be like, oh, DraftKings is now available that we've seen advertised for the last 2 years. So that's obviously helping them massively as well, and obviously still shows a lot more room that they can expand in. And the big thing is as well is when you look at that's the sportsbook side of it. You know, you look at iGaming, that's got plenty of growth still going forward. So that's some of the key data points that were in there, and they were absolutely, just look at the beats, they were just absolutely insane. And now we're going to get onto some of the open letters. So actually, I don't know if you've seen it, but Jason Robbins, Jason Parks actually put an open letter out to DraftKings shareholders, which I thought was fantastic. You know, the level of detail that Jason Robbins and Jason Parks go to give information out, just to go, you know what we'll do is actually give a letter to shareholders, just so you know where we're at and what we see coming forward. Absolutely fantastic how this management team cares about the shareholders. And what also was on the webcast, which was quite interesting as well. So one of the key points that was stated is they actually achieved positive EBITDA in October. They were profitable in October, which was absolutely fantastic. Now, they would have actually been profitable in November and December, but they had new state launches. So the new state launches mean they didn't achieve positive EBITDA. If it wasn't for them, we would actually been achieving positive EBITDA a year earlier than what was expected, which was just unbelievable once again. They're expecting positive EBITDA in Q4 2023, so we only have to wait now a year until we actually see our first positive EBITDA quarter, which is exciting. And actually, I've got another point to make about that in a second when we get down here. Positive EBITDA for the full year in 2024, so that's going to be really good. Then we don't have to worry about the cash burn. And in fact, that actually goes on to the next point, which once again, they reaffirmed no capital needed. They don't need any more capital. They don't need to raise capital from shareholders. They don't need to, do more debt offering. They're going to achieve profitability without having to dilute shareholders, without having to raise capital or burn through the cash balance, which is great. And this is the big thing that bears have used against DraftKings for the last 12 months, 24 months, particularly in the last 12 months, is DraftKings is going bankrupt. DraftKings can't make profitability. DraftKings are going to run out of cash. I don't know when they're going to start listing, but they've got to at some point, because you can see here clear as day, the longer this story is going on, that story that's being used against DraftKings is just getting dismantled. And it was just so clear. So yeah, no need for more capital. We'll have 700 million of cash left when they do achieve positive EBITDA. This is up quite a fair bit. I think last time they gave us the numbers, I think they were saying, I think it was 400 million. So yeah, that's obviously fantastic as well. So 700 million in cash will give them a really nice cash balance when they start doing that to do things, whether that be pay down debt or whatever it will be. And another thing that was actually quite interesting is that they said that they actually expect to be on the higher side of 700 million. Like, we put 700 million down, but we would actually expect that to be somewhere like 730, 740 million. So that was a little gem that was dropped in the conference call. States getting to profit faster. So this is a big thing. We heard a while ago that historically it took states 3 years to get to profitability. It then took states 2 years to get to profitability. And they're now saying that some states are getting to profitability in 12 months. So you launch a state, 12 months, it's then profitable, which is a crazy turnaround from where they were a few years ago. And this means that all these states that are launching are just now, getting to profitability that quicker. They're not really a burden on the company's profit. And this is why the story's changing now. People ignore this for so long. It was clear that this was always going to happen, but because when they're launching these states now, they're doing national adverts, so they don't need to push out the advertising as much. It's clear when you look into the financials of the company. The advertising costs are coming down now. The scale of the company's coming down now because they've achieved it. They've achieved scale nearly at the point now where anything that they launch going forward isn't a massive burden on the balance sheet. So that was fantastic. So as well as getting to states profit quicker, they now have 11 profitable states. Now, if you actually look at the start of the year, the forecast was to have 10 profitable states. So this is once again miles ahead of expectations. And they're actually going to update this. I'll talk about it in a second. They're going to do another investor day, but they're going to update how many they think they'll get going forward. But this is a big thing this is why profitability is happening now, and people just ignored it for so long. The difference is now DraftKings has been operating for so many years now. You know, them 2018, 2019 states are now profitable. DraftKings has got to the point where scale now where the profitable states can fund the new state launches. Previously for DraftKings 3 years ago, when DraftKings was launching new states, there were no profitable states to cover the costs. Now there's more and more profitable states. They're covering the state launches, and this is why profitability is on the cards for the next, potentially the next 12 months, because it's got to that point of view now, which is absolutely fantastic. Gross margins are looking to improve. They potentially could go from 38% to 42 to 45%, which is what we want to see. Long term, I do want to see DraftKings push towards the 50% gross margins, which I think they will achieve. So that was really important to see. 5 states from 2018, 2019, this year they still grew 50%. This is the crazy thing with this company. This company launches these states, and these states get so much marketing pumped into them, and then people think when the marketing disappears, these states that they've launched, 3, 4 years ago, 5 years ago, they think they stopped growing. They don't. They're still growing. They even said that New Jersey that they launched 10 years ago in the iGaming is still growing. So these states that launched only 3, 4, 5 years ago, these states last year still grew 50%. So this is the crazy thing. This is why the company, even when the company matures and is generating profit, these states that are still recently launched are still going to grow massive. And this year, like these states that are only 3, 4, 5 years old, they're still growing 50%, which is just absolutely insane. So that was an unbelievable figure that they put out, and that was actually in the open letter. The retention rate, this is a big thing that I'm starting to see. Bears are starting to move from the point of view that DraftKings can't make profit because they're looking at what's going on. They're going, oh crap, DraftKings are actually going to make profit, these guys. So they can't use that argument against DraftKings anymore. So the big thing is they're now going to the retention rate. They're saying that, what happens is there's going to be new players in this area, and then DraftKings, these players that sign up for DraftKings are just going to hop around. And DraftKings once again proved that was wrong, because what they said is the retention rate is 87%, and that's off states that have been for 4 years. And they said the most churn happens in the first year, where people are signing up are bouncing around between sportsbook deciding who to stay with. After really the first year and you get into longer term of states, everyone pretty much stays with who they're using. And I can, as someone from the UK, I can 100% agree with that. Personally for me, when I was 18, I thought, you know what, I can do a little bit of betting here now. I'm going to try a few different sports books out there. And then eventually I went, you know what, I would just want to stick with the one. And I personally stuck with William Hill, and I think I've been with William Hill for the last 10 years. I used them to put a bet on the Super Bowl on the weekend, which actually came through. I put it on the Chiefs to win, and I also put over 50 points and Kelsey to get a touchdown as well. So that was a nice winner that came in on Sunday or Monday, however you look at it. But and we're getting off topic now. But personally for me, this is the big advantage that I think we have from the UK. We know this is a successful industry. We know that more than likely, most people, once you sign up with a sports book, you stick with them. I can 100% agree with that. I've been with William Hill for the last 10 years, and I don't really change that much. And that's what DraftKings is saying, is like, there's a little bit bouncing around in the first year, but longer term, 87% retention rates, that's absolutely unbelievable as well. Investor Day, there's another Investor Day coming. So last year they did an Investor Day in January. There was no date confirmed on the conference call, but from what Jason Robbins said as he finished the call, he said, and we'll talk to you in a few weeks. That suggests that they probably will do the Investor Day, not in January, sorry, in March time. So I'm thinking that he'll probably do it very, very soon. So we'll see what happens. Last time when we did the Investor Day was fantastic. I think today was fantastic, but I think this was an unbelievable what they put on here. But I think the Investor Day last time was since this time was the last really time I was just so impressed with DraftKings. So I'm looking forward to Investor Day. In the Investor Day, they're going to talk about more about these profitable states. So that's something to keep an eye on as well. What I thought was interesting was the World Cup. Someone actually asked a question on the conference call. And the suggestion was like, was the World Cup a big help for this quarter? And Jason, I think it was Parks, that said that he basically, I mean, to have the CEO and CFO both called Jason, what a nightmare. But he basically said that he thinks that looking at the numbers, they didn't see much of a gain from the actual World Cup. They said, I think what they lost from people that was using sports betting for, say, the Premier League went to the World Cup, and they didn't potentially gain that much from the World Cup. So this quarter here wasn't just a bump up because there was a one-off event of the World Cup either. It very much sounded like to me here that the World Cup was actually a bit of a disappointment in this quarter, and they still delivered these earnings, which is even more impressive when you consider, this is a once in a 4-year event, and it wasn't a great quarter just because of that one event either, which is great. Second last point that I've got on the whiteboard today, which is, I won't keep you much longer. Q3 positive maybe. So we've seen here that they potentially mentioned that Q4 2023 will be positive. When I listened to Q3 and someone asked a question about it, could we see potentially a little bit earlier? It sounded like they were a bit like, oh, maybe, but we don't want to say and give that away and put that pressure on us delivering on that. They said that potentially the last bit of costs are going to come in Q1 and Q2. That's where the biggest expenses are. But Q3 potentially, I would not ignore that they actually come in a quarter early, potentially on positive EBITDA. We'll see what happens. So that's something to keep an eye on. They might shock the market a little bit and come in a quarter early there. So that's something that I thought was interesting. Last one was long conference call. This was a long conference call. Their opening remarks was literally like 10-15 minutes long. And it went on for an hour. That's when most companies after an hour go, right, we're going to call it there. And DraftKings, said the operator on the call was like, oh, that's all we have time for. I'll pass it on to Jason Robbins for any closing remarks. So they called it there. What I was impressed by is like the amount of, it was a very short opening remarks, and then there was like 45 minutes of questions. And the fact that now you're seeing a lot of analysts queue up to kind of ask these questions was really positive. Seems like a lot of analysts getting interested in it, and like there was big names on that conference call. There was like JP Morgan asking questions. So clearly there's some attraction on Wall Street to get involved in this company, which is obviously really great as well. So that's all I've got. Obviously, a fantastic quarter. I mean, 11 out of 10. It's the best quarter that I've seen them deliver as a public company. As me being a shareholder, it's absolutely fabulous. So, well done. It just gets you more excited for the future. And well done for any of you guys that kind of held the stock through that. And let's just have a moment for the analysts that came out, was it a week ago, and said sell DraftKings before earnings because they're going to be absolutely terrible. We'll just have a minute for them as that share price just popped 16% today. But hope you enjoyed the video as always, guys. And if you could smash the like button, that's absolutely amazing. If you're new around here, subscribe. And if you do want to join Trading 212 and get a free share worth up to £100, make sure you join it. That's who I use for my investments. And have a great weekend. I know I will. And I'll catch you in a bit.